everybody! Do you want to buy a revenue property or a rental property and you live in Canada? Do you? Do you really? Well, if you live where I live, Calgary, Alberta, Canada, everybody is out there saying, boy, I should have bought some revenue property 5 years ago. Well, 5 years ago I was telling people to buy everything they could. Everything they could, and they wouldn't do it. I told them go do this, they wouldn't do it. Interest rates are 2%, they wouldn't do it. Lock in your rate, rates are gonna go up, they wouldn't do it. Nobody listened. Well, about 30 people a year listen, because that's about how many revenue properties I sell a year. Now, it is 2025, so if you're watching this video, remember, real estate is time-stamped. It's like an investment. If you come back and look at this video 10 years from now, you're gonna go, you could buy a revenue property for $350,000 in Calgary? How did they do it? And why didn't you buy 100? Or you'll be coming back 10 years from now, we'll be in a Great Depression and everything will be 200 grand. Like, oh man, I'm really glad I didn't buy a revenue property. Well, let me tell you, I bought my first revenue property in 1982 and I still own it today. And the only reason it's not long since paid off is I would refinance it, go get another one, refinance it, go get another one. And yes, I went too far and I paid the price and I have to start all over again. So just to let you know, I'm very cautious, very reserved. You don't go and buy 10. Well, you can if you got the money, and I mean lots of money. But you want one. You're like, hey, oh, everybody's buying revenue property. I want one. Oh, okay. So let's just say the answer is yes. So who do you do? What do you do? You contact me and we sit down together, face to face. I tell you exactly, this is what you need to do. And you go and do that. Now you don't fly by night it. You don't take 10 weeks to do it like somebody else I know. You don't call me 27 times. You gonna show me some property? You didn't do step 1, 2, and 3. Means you don't want to do it. Is it nerve-wracking? Will you get buyer's remorse? Absolutely. I just want to let you know, every property I've ever sold, I got buyer's remorse. I bought one a couple months ago. I got buyer's remorse. I put a tenant in there yesterday. And I'm like, man, am I glad I bought this. So, let's get down to the nitty-gritty. Can you buy revenue property? 5% down. 5. Because that's the title of this video. Buy a revenue property or a rental property, 5% down. You can, but you got to know something going in. And most people will not do this. Okay? There's a couple things you got to do. I'm not mentioning it. You got to sign on the dotted line with me and know I got to know I'm getting paid. I'm not giving it away for free. So if you want it for free, just, buzz off. Go find someone who doesn't know what they're doing that'll sell you a terrible building, a terrible location, and when things get normal, you won't want to own this thing and you will panic. Panic, panic, panic. Why did I buy it? Randy said to buy it. Randy said to buy it. Well, I didn't sell it to you. If I sell it to you and you follow the rules that I have had for 10 years, I shouldn't say 10 years, since 1982, the 10 rules. Since 1982, you will never ever regret owning revenue property, even if you get a hoarder, even if you get a guy that doesn't pay his rent, even if you have to go to court and get rid of them, which I've done. I don't care, just don't care. Okay? So, number one, say you're going to go out and buy a revenue property. Let's use $350,000 as the number because you can buy a revenue property for $350,000. And no, it is not a single family home. No, it is not a half duplex. And no, it most likely will not be a townhouse. Because in the areas where you can get a townhouse for $350,000, I'm not buying revenue property. Sorry, just not doing it. Not doing it. I buy, ready for this? Outstanding locations, close to transit, and good buildings. I don't buy that crappy stuff. I don't do it. I overpay. I've overpaid for every revenue property I ever bought. This house that I'm living in, I overpaid. And everyone goes, well, how did you know you overpaid? Well, the appraiser appraised it at $150 and the seller wanted $175. I gave him $175. I begged, borrowed, and stealed money from everybody. I had I got the seller to carry a second at 15%. I did everything. But I knew, hunker down, get her done. So, revenue property. Here we go. Are you ready? Number one, 5% down. You're going to buy a 350 property. Here's the numbers. You need $17,500. This has to be in your bank account for at least 3 months. You also need closing costs on that $17,500. Our illustrious, no good for nothing provincial government, 2025, that's Danielle Smith. So when you come back in time and look at this, maybe it has changed. Put the land transfer tax. So your land transfer tax is, instead of $500, now $3,500. Oh, gee, thank you very much. Didn't even tell anyone. You need closing costs, $10,000. So you need $27,500 to buy a revenue property, minimum. Can you buy it 5% down? You can, but there are some speculations that you have to put in there, and I won't tell you that until we meet. 2, maybe you want to do it 20% down, which is called conventional. You need $70,000 plus $10,000 in closing. If you have $80,000 and you want to buy a revenue property, why are you not doing it 5% down? If this is your first one, 5% down. Oh, I can't do that. Yes, you can. Absolutely. And here are the numbers. So this is the hard part for people, and this is why they don't do it. And or buy the wrong thing. Number 1, if you buy 5% down, you know what the interest rate's going to be? It's going to be 4.3% as of today. I talked to my mortgage broker this morning. 4.3%, maybe 4.2, but you better have real good credit up into that, close to that 800 score. If you do 20% down, you're going to be 5.3%. If not 5.5%. That's right, the interest rate is higher the more you put down. How dumb is that? You know why? An insured mortgage can be bundled and sold, and the bank just takes a servicing fee and actually is not at risk at all. The government's at risk. This should be ended tomorrow. 5% down used to be first-time home buyer, not second-time home buyer, not every time you buy a home buyer. You do it once, that's it. Got to be conventional after that. Anyways, it would crash the housing market, but that's just me. So how do the numbers work when you do the 5% compared to the 20%? Well, let me tell you quick. Are you ready? Write this down. $195 and, no, hold it. I'm sorry. $194.67. That's the difference in your payment. I'm like, well, just hang on a second. Randy's got a calculator down here. I'm going to put $345,000 in the calculator at 5.3%, and I'm going to put the $280,000, $280,000 in at 5.3%. I get more than $194 difference. Well, remember, do 5% down, you get 4.3%. You 20% down, your whole percentage, if not more, higher. And that's just the way it is. Once you start getting into multiple properties, this is just how it is. You got to put 25, 30% down, or they won't give you a mortgage. Oh, I can do it at 20. No, you can't. For those people out there that says that you can do this, you're lying to people. And I guess, if you con people into doing that, go ahead. I don't do that. I tell you what the facts are, what you need to do, and I'm brutally honest about it. Most people do not like this. They like me 10 years. Oh man, I'm really glad I bought those properties. Look what they're worth today. More importantly, what are they renting for? It's not about the value. Remember, you make money in real estate by buying it, not selling it. You sell it when you're my age or 70. That's when you sell it. You don't even think of selling it before then, unless you're Detroit. If we're Detroit, sell everything, move away, because it'll just go down in price. Put your 5% down, $17,500. You need closing costs, $10,000. And then, of course, you are going to spend easily, once you take possession of that property, even if it's turnkey and it looks perfect, you're going to spend $3,500 getting it rented. Easy. You're not going to get it rented right away. You're not taking possession on the 15th of the month and then getting it rented by the end of the month. There's no way. Don't rent to that person. You're going to go a month vacant. Okay? So you're going to incur your mortgage payment of $1,871.31. And the taxes of probably $140 a month. Taxes in Calgary really cheap on property, and you can complain about it you want. I'm never going to complain about the property tax rate in Calgary. It is the lowest for the average priced house in Canada. Take an average priced house, what do they pay in taxes? Calgary's the lowest in Canada. Nobody's lower anywhere in Canada. And all we do is complain about it. So, You're going, well, this property is going to cost me $2,000 a month to own, and I'm going to rent it for $2,000 a month, and I'm going to break even. Okay, so you did the 5% down, or the 20%. So remember, $194.67 difference. So you go buy that property, you get it ready to go. Let's get into results. You've bought the property, you got it rented for $2,000 a month, and you're like, this is good. When people are doing 21, I did 2. I got a really good person. They're going to be there for a long time. I firmly believe you should be a little under market so you get good people. But people are greedy. I want 2,500. Well, they just move all the time. And vacancy is a whole other video. I'm not even going to go into what vacancy costs. I just want to let you know, if you go vacant, someone gives you notice and moving out on June 1. Okay, last day of the month. You get their tenancy on the first day of the month, you got to be out on the last day of the month. So the landlord in Alberta is allowed 1 day to get that place ready. So, they're moving out on the 30th. I'm going to have it rented for the 1st. Nope, you will not. It'll be the 1st of the next month or the 1st of the next month after that, regardless of the rental market, because you don't rent to people you don't want to rent to. And this is why I talk about you should do the 5% down, because you got the 80 grand and you put it in the bank and you put it in your rental account. And yes, you open up a separate bank account. And yes, all the rents go in there, all the bills go in there, everything go in there, so you know it's covered. If you don't do this, you will complain about owning revenue property. You'll complain about the tenant, you'll complain about everything, and you'll regret what you're doing. So, did I make a profit? Headline: profits! Did you make a profit? You rented it for $2,000, it cost you $2,000. At the end of the year, I didn't make any money. Why would I do this? It's zero. I rented for $2, I got $2, I got nothing. I gotta make money on my money. Guess what? Well, you only, first of all, put 5% down. So, stop complaining. 2, you did make money. And I'm gonna explain a little bit of accounting to you here. Are you ready? Okay. Are you sitting down? Are you ready? Are you concentrating? Okay. If you rent a place for $2,000 and it costs you $2,000 because your mindset is, I own this, I make a mortgage payment, I pay the taxes, and I rent it for $2,000 and I fork out $2,000, that's called cash flow. I cash flow nothing. Zero. But I go to the lawyers, I go to my accountant, I'm going to file taxes. And when you file taxes at the end of the year, you're going, oh, I got to claim $7,740 in profit and pay taxes on it. That's right. Cash flow zero is a profitable property. Because guess what? Mortgage pay down is profit. And your tenants are paying down the mortgage. And on a first month mortgage, oh, just hang on a second. That's on the first page. $645.99 a month is profit, and it goes up every month. Okay? At the 10-year mark, guess what that is? $1,000 a month. That's right. You keep this property for 10 years, you're $645 a month profit. Never put the rent up, never change anything. You're now making $1,000 a month. You just went from $645, $1,000 a month in profit, and you didn't do a damn thing. What? I went from $650 to $1,000 a month in profit. I didn't do anything. Didn't do anything. I didn't put the rent up. I didn't do nothing. That's all I did. How'd that happen? Mortgage pay down. You now have $12,000 a year in income you got to claim. $12,000 a year in income. And you got to pay taxes on that. So cash flow zero is a profitable property. Oh, I'm going to have deductions. I'm going to have deductions. Yeah, like the Chicago Bears have deductions. Deductions. So I can tell you it's absolutely worth doing because you buy revenue property for the future value and future income. Why do you think Canada Pension Plan just bought a building downtown Calgary? 218 unit building, just finished completion last year, is fully rented, and that property just sold to Canada Pension Plan. There's another building that I already know will be fully rented in a month, and IMCO's going to buy it. That's the Alberta pension plan. I also know of another building that's being under construction right now that's just a rental building, and that is going to be bought by Ontario teachers because the people that are doing it know Ontario teachers want to buy it. Why are they buying all these rental buildings? Well, profits. Because $645 a month today is $1,000 a month in 10 years. And when you need income in 10 years, this is when you need the income. When you're 60, you need the income. You don't need the income today. But no, I got a cash flow. I gotta rent that for $2,600. I need the $600 a month. If you think that way, you will never get good revenue properties. You will miss out on the best ones in the best locations that have consistent tenants that nobody move. And trust me, tenants not moving is gold. Absolute gold. Someone staying there for 10, 12, 13, 14 years. Little increases and they stay. They go from $2,000 a month and you wait 2 years and you move them to $2,050, and then you wait 2 years and you move them to $21. You wait 2 years. You see what I'm saying? You do $25 a month, or maybe you just leave it there. Next thing you know, you're 10 years later. They've been there for 10 years. You know what you spent? Nothing. And if a turnkey doesn't need anything, maybe a fridge will go or something. But honestly, you're not going to spend any money. And the money I make you put in your revenue account to cover unforeseen expenses and vacancy will just sit there and grow and grow and grow. And as I always say, once that kitty doubles in value, so the $10,000 turn into $20,000, which happens, you take the 10, you make an annual payment on the mortgage. And you'll do that 3 or 4 times before the 25 years is up, because you only get 25-year amortizations in Canada. And anyone taking more than a 25-year amortization, don't call me. Don't buy a revenue property. I don't want to know you. You are not allowed to do that if I'm selling you a property. If you're going to do that, don't tell me. I will kill the deal and just never call you back. I don't sell things to people that put them in financial trouble. I do not. I absolutely do not do that. I am not doing that. So, can you buy a property 5% down? Yes, you can. Revenue property is one of the greatest wealth creators that exist, but it's long term. You want FOMO, you want to get into something, I want 10 times, I want to make 10 times my money a year, go be a criminal, because there's nothing legal that does that kind of thing. Oh, you get lucky every now and again, but no. So back to the profits. You got the 80 grand. This is what you do. You buy it 5% down. What do you do if you buy it 5% down? You have $52,500 in your revenue account. That's a lot of money. Oh, wow. Gee, more than covers, well, in 10 years, your $195 a month difference, if you put 20% down, $23,000. So, okay, well, I still got $30,000 in that account that I didn't use. Wow. Maybe I should do something with it. Oh, and by the way, your rents will go up slowly over time, and that number will get greater and greater and greater. But this is what you're doing. So, I don't understand. Why am I making so much money? I'm making so much money. Why didn't I buy more? I should buy more. So, just so you know, if you buy 5% down, this is what you do. You put the 5% down, you rent it out, you put the excess money that you would have put down in a little kitty. And you open up a bank account somewhere and you put that money in there. The mortgage comes out, the taxes comes out, insurance, it's a condo, so you don't need insurance. Whatever you're doing comes out of there. And trust me, it's going to lose money. It's going to lose money. And it's going to lose money for the first 5 years. Because the cash flow numbers that people think, they think money in, money out. Well, that's fine and dandy, but even if it was losing $500 a month, you got mortgage pay down at $645, you're making $145 a month. It won't feel like that. You're like, man, I'm putting $500 a month in there. Well, that's fine. You bought it 5% down and you saved $52,000 in your bank account just sitting there. So when you get vacancy, you don't care. If something breaks, you don't care. You take your time, you get good tenants. You leverage yourself up. Well, you got $1 left like I did in the 90s. Man, you rent to people you shouldn't rent to, because I did it. And I tell people not to do that. You want to do that, just don't tell me you're doing it. I'll find you great properties and go off and do what you want. Don't phone me when you got a problem and someone needs to be evicted. I know my birthday's coming up, but I only like so many birthday presents. 100 a year would be nice. 100 birthday presents a year would be really nice. But anyways, that's how it works. You can buy 5% down. You can buy 20% down, you can buy 25% down. Personally speaking, me right now, I have to buy 100% down. That's right. If I'm buying a revenue property today at my age, I have to put 100% down because the amount of mortgages I have and the amount on my line 150, no more mortgage for me. Simple as that. There's no equity lenders left in our country. They all want to insure it so they can bundle it and sell it. The days of 25% down and getting a mortgage because you got good credit are gone. I would start a finance company tomorrow and do 25% down equity mortgages at 5.3% instead of 4.3%. I'd do it tomorrow, but you need $50 billion to do that. I would just do equity lending. Do you know how many people default on their mortgage that put 25% down? 0.001. 0.001. You need to issue millions of mortgages to get a default. Millions. And you can charge an extra percent because it's 25% down. But the banks don't do this anymore. Thank you, Stephen Harper. You screwed up our banking system, allowing back in insuring and the banks being greedy. So that's a whole other video out there, people. This is about 5% down. So if you want to take advantage of the system, you want to take advantage of the rents, you want to take advantage of great buildings and great products. I just listed one yesterday for $325,000. 2-bedroom, 2-bathroom in a phenomenal location, in a phenomenal area for $325,000. This would rent for $2,000 a month easy. Well, I would rent it for $1,950 because everyone else is asking $2,200 for the last 4 months. Everybody wants $2,200. Well, I'll do $1,950. I'm rented. I'll get good people, and I'll get $1,950, and they'll stay for a long time. So that is how revenue property works, people. You could do 5% down. You have to contact me, rentalproperty@randybrook.com. Okay? And I will get back to you when I'm not driving, and we will sit down and you will do exactly the 10 things I want you to do. I'm not giving it away for free. If you want those 10 things, it'll cost you $10,000. That's right. I'll charge you up front and you can go off and do whatever you want. It's called a buyer's representation agreement. But that's up to you. But if you want great property, and you could do $350,000 and qualify for it, what are you waiting for? Because next year, when I do this, do you want to buy a revenue property? I'm not going to be using 350 as a number because there will be no 350s available. It'll be 400 or 450s. Because these 350s are disappearing fast, like 300, oh my Lord, gone. Single family in Aaronwoods, 450, gone. Gone in a day. 5 years ago, I sold 22 properties in Aaronwoods under $300,000, single family with a garage. Those are all 450 now. I guess you should have bought some. Well, let's just think about that for a second. So if you want to do revenue property, you live where I live. I'm the only guy in town that knows how to do it. There might be one other guy, but most people just want the deal and run. I want to sell you this. I want you to be successful. I help people. I'm always available to answer your questions, especially about revenue property. I just don't sell and run away and never talk to you again. So, are you going to say nay? All you Koreans out there, are you going to say nay? Or are you going to say no? Any-o. Are you going to say no? No. You're going to say nay. Yes. And thank you for tuning in and giving me a thumbs up. And I will see you in the future on a beautiful sunny day in a hoodie because I don't wear suits anymore.